guys, I'm Keith Meredith. I'm a mortgage loan originator, and today I want to talk to you about self-employed mortgage options. This can be a sore subject, all right? You're self-employed and you're making good money, but when you go to file your taxes, you're taking advantage of the tax code like it's meant to be taken advantage of. Who wants to pay taxes if they don't have to, right? So you're living your life, you've got a car, you've got credit cards, and when it comes to getting credit, the only situation that you really run into trouble with in regards to your tax returns is buying a home. And so that's changed a little bit in the recent years, actually in some big ways, but it's still a problem. It's a sore subject for a lot of people. There's throughout the years, hairdressers in particular, I know that they're making good money. A lot of it's cash tips, but we go to look at the tax returns and it's like, gosh, man, there's nothing we can do, right? But things have changed, and there's a few things that you just need to consider and know as a self-employed individual, because you could be denied or told no, and unrightfully so. This is a niche part of the business, and knowing the ins and outs is important. So the first step would be income. Is your income being calculated correctly? There's certain things that we can add back in, certain deductions that we can add back in as usable income. Approximately half of your mileage deduction, most depreciation can be added back in as usable income. If you have a company like an LLC, and so you've got a K1, maybe there's a large one-time deduction that you have on there that just is not a normal deduction that you're not going to have every year, if it makes sense. A lot of times we can get the underwriter to say, oh, you know what, that deduction, that is income, and we can get a deal done. You can use any loan program as a self-employed borrower. You can use FHA, USDA, VA financing, conventional financing, obviously. But the beauty about conventional financing is that if you have been self-employed for at least 5 years, in a lot of cases, we can get it approved through Freddie Mac, where you only need 1 year of tax returns. So this is huge. So I'm not telling you to engineer your tax returns, but it's definitely advantageous to only need 1 year of tax returns that look good and chunky for you to buy the home that you want to buy. And that's one way to do it, is to go through Freddie, and there's certain credit score requirements, and sometimes money down can affect whether or not it allows us to provide that 1 year of tax returns. But knowing that system and knowing its availability is important, because some banks, they don't care, they still want 2 years of tax returns. But we can get it done with 1 year in some cases, and so that's a huge benefit. It's if you're planning on filing taxes and you're planning on shopping, sometimes it's just a matter of not deducting everything that you could possibly deduct, and you're paying taxes on that money, and it's income that we can use. We cannot go off of the gross figures, unfortunately. We have to go off those net figures and then add back in allowable deductions. But the beauty of it being 2019 now, and maybe it's 2020 by the time you see this video, I'm not sure when the next time I'm going to update it is, but now we have bank statement programs. Bank statement programs are sweet, right? You're self-employed, you're writing off everything that you can possibly write off, and so on paper it doesn't look like much, but we know, and the bank knows, that you are making money. So we can get 12 months of bank statements. If you've been self-employed for at least 2 years, we can get 12 months of bank statements, either personal or business, and all we're looking at is the deposits in that account each month. Now, if there's strange, large, irregular deposits, we won't be able to use those. But generally, we're gonna just look at how much went into that account for the month, and we're gonna use that as income. And we're not gonna look at the deductions or the debits from that account. So what I find, and I'm helping a lot of self-employed borrowers out with this, is that it works. That income is there. They've been paying rent on time, and the income is there, and we can prove it with bank statements. Your rate's gonna be a little bit higher, but you know what? That compared to paying the IRS, It's not a bad prospect. We don't have to provide tax returns using the bank statement program. W-2s, K-1s, none of that stuff. So this is a real beauty. And you can do it with as little as 10% down. Scores down to 600. With a 600 score, you're gonna need 15% down. But this is saving deals, and it's gonna continue to save deals. So it's important for you to be aware of it. If at all possible, if you can get a conventional mortgage, let's do it. Let's get that income figured out correctly. Let's add back in any allowable deduction that we can and get you a conventional mortgage for 15 or 30 years, and it's a conforming loan. If that doesn't work, bank statement programs, yeah, your interest rate's gonna be a little bit higher, but you ain't paying Uncle Sam, and you can get the home that you want. And maybe in a year or two, your tax returns look good enough to refinance if you really wanna try to drive that rate down. But keep this in mind, even with 10% down, no PMI. 10% down, no PMI. So it's not a bad deal, guys. Call me if you have questions. This area of what we do does require an extra level of expertise. So if you're self-employed, I would be glad to have a phone conversation with you and try to figure out a deal for you. If you're a real estate agent and you got self-employed borrowers, send them to the guys who are getting done, one way or the other. So be glad to help you out. Give me a jingle. Thanks.